most of the industry, I'll call it, does a few of the things that I just described. So they'll do things like cash flow planning, goal-based planning, portfolio, things like that. But they typically don't touch income tax or wealth transfer. And the reason for that is most of the time that's done by a CPA or an estate planning attorney, at least in the eyes of many advisors and many clients as well. Different reasons for that. So I grew up in this industry, and part of the practice management when you're an advisor is to partner with CPAs and estate planning attorneys to refer work to them, get referrals back, that kind of a thing. So as a practice management for many advisors, it's become a referral or business development function more so than part of their planning or process or investment offering or anything like that. So it's been outsourced and used in different ways, and for that reason, there's just not a lot of advisors that do this type of work. When you then look at the CPA world, the CPAs aren't doing what the advisors often think they're doing, and there's reasons for that. There's just not enough of them. They tend to be focused on compliance work versus forward consulting type work. And then when you look at estate planning attorneys, they don't really have a big picture view. They lack a lot of the facts and assumptions and goals and things like that. So they often are just taking orders or kind of doing one-off transactions to solve a particular issue. So the experience, I think, for a lot of high net worth clients has been, they've had some tax interaction with their CPA, they've had some estate planning interaction with an attorney somewhere, they've had some investment interaction and probably some cash flow planning with an advisor, but nobody's really done all of those things for them at the same time and in a way where they understand that if you squeeze the balloon here, how it expands over here and what that means. And so our finding is that if you eliminate a couple of these things, it's almost useless as a plan. So if you aren't focused on income tax planning as an example, building a cash flow plan is hard to do because income taxes are one of the primary inputs to that. And so if you don't have a real good plan of attack on that, it's garbage in, garbage out kind of thing.